Welcome to Cherry Street Investor Education with Kavita Baratake, passive income coach and founder of Cherry Street Investments. Education that is designed for you to take control of your financial life. Join us to learn how you can create multiple passive income streams, diversify your portfolio, save on your taxes, and much more. Become a better investor and fast track your financial goals. Here's your host, Kavita Baratake.
Good evening, everyone, and thank you guys for joining in. I'm Kavita Baratake, founder of Cherry Street Investments. I focus a lot on passive investments for my investors, besides a couple of other things, and I'll talk briefly about that. So I'll just do a quick intro and talk a few things before do a few housekeeping items as well before handing it off to Diya today, and let her talk to you about her short-term rental history and also a little bit about short-term rentals and how she transitioned into hotels. Diya does a lot of education, so she is like the education person. And I heard about Diya at least, I think it was 3 years ago or something, when she was doing a boot camp on short-term rentals. At that time, I was knee-deep into multifamily, so I wasn't like looking for anything else because it was keeping me pretty busy. But I've always been following her around. And she also happens to be a salsa dancer, so we have that little connection going. And we recently met up for lunch. And I wanted to invite her to one of these webinars to share her knowledge and also see if you guys can maybe benefit from some opportunities in investing in short-term rentals. Today's webinar, although is more educational, and if you want to follow up with Diya offline, you're welcome to. So I just wanted to throw that out there. I think there's some questions out here. My voice is breaking a lot. Can anybody tell me if my voice is breaking a lot for everyone, or is it just...
No, I hear you just fine.
Okay, everybody says I sound fine. Kalpana, please check your audio. Must be an issue on your end. Everybody says things are looking good. All right, I'll keep moving ahead. So a quick disclaimer before we get started. Today's webinar is educational and there's no specific opportunity or presentation, just is for educational purposes only. Please take all of this advice with a grain of salt, and always do your own due diligence and consult your own CPA, attorney, or financial advisor for all matters. Few quick housekeeping items today. Sorry, everyone's on mute. So if you have any questions, please type them in the Q&A box. If it's a question related to the webinar, if it's related to something with audio, visual, or any other issues, please let me know in the chat box. Otherwise, locate the Q&A box and type your questions in there. It helps me kind of go through the questions one by one. Webinar will be recorded. A lot of people ask me this over and over again. To make sure that it doesn't go to your spam or promotions folder, please add my email to your contact list, and it will usually be sent out within 24 hours to your email. So tomorrow this time. A little bit about me. I came from Bangalore, India in '98. A lot of you folks know me, so I won't harp on this too long. Background in computer science, and then spent 20 years in tech, and then transitioned to real estate slowly over time from 09 to 19. So 10 years later, I finally transitioned full-time real estate. Started with single family portfolio of long-term rentals, moved into limited partner investments, and now I'm all over the place doing mostly fund-of-fund models. So I'm working in some new spaces recently because I'm not particularly operating those spaces, but I want to bring some new opportunities to my investors. I've also partnered with some folks on some land development opportunities in Austin. So a little bit about Cherry Street. I focus a lot on investor education. Thank you for those who've been following my webinars for about 3 years now. So I do a lot of webinars, and the entire thing is on YouTube, and I'll share the link with you guys. I'm also starting some syndication GP coaching programs soon in 2023, and also a passive investor masterclass in 23. Besides that, I help people invest passively in real estate across various asset classes, and also started some new asset classes I'm excited to talk about. I also have an infinite banking. I have an insurance license, so help people with infinite banking policies. And for those of you who don't know what this is, please look at some YouTube videos that I've done on infinite banking. It's a pretty cool concept on using a life insurance policy to invest into other assets. So if you're interested in my Facebook group, it's called Purely Passive. I post a lot of stuff, content related to investments. I also have an investor education YouTube channel. You could please go subscribe. That would be great. I'm up to 1,500 subscribers or something right now. And the link is youtube.com @Cherry Street. So quick plug for some opportunities in the pipeline. I have an ATM fund going on right now. A couple of investors are already in with me on this one. If you need depreciation for 2022, I've opened the fund back up again, and it'll close December 18th. Again, I'll share these details via the webinar so you can read it with leisure. 19 IRR investment, 100% depreciation, no recapture. So pretty sweet deal. I'm working with a very experienced operator on this fund. Also super excited to start the Cherry Street Car Wash Fund. So we are doing a 22.8% IRR with payback in just 3 years on this fund. Very experienced operator, again, in the car wash business. Same operator. Incidentally, I'm working with the same person as the ATM investment, but we have two different sets of operation team. We have 60% depreciation year 1 and 40% year 2 for those of you tracking your depreciation. And I will be doing another webinar for this, so I don't want to, again, spend too much time on this. We are going to be open in 2022 for the depreciation this year. So it'll be a different asset, and I love car washes because the margins are phenomenal, 40%. So the rising interest rates have very little impact on car washes versus other asset classes right now. So a little bit about Diya. I wanted to introduce her. Like I said, I've known about her for a long time, but recently got face-to-face with her. She is a phenomenal person and just an overall powerhouse in the short-term rental market and also the boutique hotel market. She owns 3 boutique hotels of her own in Texas and Arkansas, besides a dozen short-term rentals. Before she was a full-time real estate investor, she majored in chemical engineering at UT and then went to law school. And she was an IP attorney for 2 internationally known law firms. And she quit her 9 to 9, which I love. I love how you say that they are 9 to 9 because that's how hard IP attorneys work. And she achieved financial freedom just with short-term rentals. Now she spends her time jet setting around the world, and she's turned me on some cool things like Inspirato.com to book some luxury vacation rentals around the world. And she acquires new projects, teaches people how to invest into these kind of projects. And she speaks across the stage at real estate conferences on short-term rental and hotel investing. And she also owns a very large Facebook group with 46,000 plus members. So if you're interested in joining her, please do so. She's also creating an STR and hotel fund and a lot of education. Like she's very education focused like I am, which is really why I wanted to bring her here, because she's very good at educating people, and she's got a great fan following around this. So I'm excited to have Diya here today. And without further ado, I'm going to hand it off to Diya. Diya, thank you for being here. I'm excited to see what you have to share with the audience today.
Awesome. Sounds great. Let me make sure that
I'm going to stop sharing if you want to share now.
Yes, I do. Give me 1 second. Technical difficulties.
Please.
Okay. Let me try sharing again. Can everyone see my screen?
Yep.
Okay. So this is a generic deck, so I'm probably going to jump around this deck a little bit. But if people have any questions, We're mostly focused on hotel investing today. I will briefly cover my short-term rental investing journey to answer some of you guys' question from earlier. But this is a very hotel heavy slide deck. So if you guys have short-term rental questions, I absolutely can answer them too. They're just not in the slides. And by the way, all my social media links, Facebook group for joining Airbnb Professional Host, for joining my hotel Facebook group, for any upcoming investment opportunities, any upcoming webinars, it's all in direct.me/Diya Liu. If you use this QR code, it will take you to there. And then I'm on Instagram at DiyaESQ. So if you want to follow what I'm doing, which is normally a lot of travel pictures and food pictures on my stories, and then usual renovation projects and travel pictures on my feed. So if you are interested in any of those, please follow me at DiyaESQ. So brief bio, I'm going to skim over that just because Kavitha has already introduced me. And then why I decided to do hotel investing from short-term rental investing, why I started with short-term rental investing to begin with, and then our personal, investing strategy. So I'm going to skip over this because we already covered this. But the long story short, that I want to call out is that I came here when I was 8 years old from China. And, I came from a very traditional Chinese background. So, success meant getting a really good grades, going to a good school, getting a good job, and voila, you're happy, you're successful, right? So it didn't really quite work out that way. So I decided that I want to do something different with my life when I realized that 9-to-9 working lifestyle was not for me. And this is kind of the direction I went, and I'm going to tell you exactly why I went this direction today. And then this is me today. So I speak at a lot of nationwide conferences. This is me most recently on the left-hand side in Cincinnati, at Birth 360, on the right-hand side in Dallas as well. And I do a lot of market tours for my short-term rental mastermind as well as my hotel mastermind. I take my mastermind folks on really fun trips across the country where we combine travel with real estate investing opportunities. So on the left-hand side is when we were under contract on 6 units in Cabo, Mexico. And this is me working really hard and eating tacos. And on the right-hand side is me leading a golf cart tour of Northwest Arkansas with some of my hotel mastermind folks. I just want to talk really briefly about 2019 to 2021. And so, I did a lot of deals when I quit my job in 2020, basically. But I started with short-term rental investing in 2019. And I decided that I wanted to do short-term rentals over everything else because there were just a lot of folks that knew a lot more about real estate at the time. But I knew what I really knew was digital marketing, was design, and understanding search engine optimization. So those are things that normally traditional real estate investors are not that tech savvy. They're not that design driven. They're not that hospitality driven. And therefore, I knew at the time that I could easily beat a lot of the other operators in the short-term rental space. And so I did a lot of deals, and between 2019 and 2021, just residential real estate, making a lot of offers, and also doing short-term rental wholesale and hotel deals, and short-term rental flips, and also owner financing, et cetera, et cetera. So I'm going to highlight the key moments of those few deals and what I've taken away from those deals, and why I decided that, knowing what I know now, I want to get into hotels from the short-term rental space. So why did I originally fall in love with short-term rentals over long-term rentals or any other real estate investing method was the cash flow. Um, a lot of folks fall in love with short-term rentals because you are able to 3, 4, 5, 6x your cash flow on just a single asset with converting a long-term rental into short-term rental as long as it's in the right location. So this is a short-term rental, I think the third one that I've ever purchased, and I bought it for a little bit under 100K. And you can see on the left-hand side, we're actually on the right-hand side, excerpt from the closing statement. For those of you guys who cannot see it, it says that I put about 12K down payment on this property. So I bought this for all in for about 12K. And I was able to get over $500 a night during peak season on this one ski condo. So that is the beauty of short-term rental real estate, is that you cannot get this sort of cash flow from long-term rentals. And when I realized this initially, that's why I was hooked. And you can also see on the top that my monthly PITI, or principal, interest, taxes, and insurance, is only $600 a month. And you can see on the left-hand side that this is a payout, Airbnb payout from this particular short-term rental, that I'm easily able to make that, 3x that in just one single booking. So this is what really hooked me in short-term rentals. And this is also why I love hotels investing. And you'll see why later, is because hotels is kind of similar to short-term rentals in that you are able to get a lot more cash flow for the same building in the right locations compared to multifamilies or some of the other commercial asset classes. And you can see here, this is, and so this is addressing 2020 pandemic concerns. What about hotels or short-term rentals and these sort of market downturn times? So I hear a lot of times from folks, hey, short-term rentals and hotels, they do really well when the market's going well, and they do really poorly when the market's doing poorly. Well, let me show you this slide. So this is my assumptions when I bought my ski condo. That was 95K. That was the closing statement that you saw in the previous slide. And I thought I hit the jackpot because I was going to make 70K gross rental revenue on a 95K acquisition. I was like, oh my gosh, I won. I can quit, etc. But I bought this in late 2019. So in early 2020, everyone knows what happens, right? So the ski condo in which this state is located in, it was pretty shut down due to the pandemic. So instead of getting 70K gross rental revenue, I ended up getting about 32 grand that year, which seems like a lot lower. But if you really think about it, there's pretty much no long-term rental that you can gross 32K on a 95K acquisition. You're still way above the 1% rule for any deal for this deal. And so a lot of folks who say, hey, we're heading into uncertain waters right now, etc. What do you think about that when buying short-term rentals in those kind of conditions? And I'm like, great. I'm going to pick up a lot of short-term rentals and hotels for cheap. And I know that as long as I buy right, I'm still able to cash flow a lot more than long-term rentals. And so these are actual numbers. So this is ski condo 1. The first one I bought was in 2019. And then I bought another one very quickly in April 2020, which during the peak of the pandemic. And I bought both and resold both a year later for double the price. So not only did I gross 32 ish a year on average for these two condos, I was also able to significantly capture the upside once the market swings back the other direction. And everyone in 2021 was trying to buy a short-term rental. And so when everyone's doing that, I'm going to sell out, most of my short-term rentals during that time and capture the market upside. And so this is another example of why I love short-term rentals, but ultimately decided to go into hotel investing. So this short-term rental was one of my most proudest moments. I bought it for $255. I put about 10% down using secondary home financing. I grossed $97,000 in between 2020 to 2021. Based on those financials, I was able to sell it for $500K. And then I had to do an owner carry because 500K was not what the other townhouses in this complex was appraising for. 500K was what me and the buyer agreed to transact the sale under, because, something that grosses 97K deserves the price. Basically, we decided for 500K because it was a turnkey business that they are buying from me. However, it's residential real estate, so appraisers are not going to agree with me, right? Because they are going to appraise it based on whatever other properties are selling for in that area. And so I got really frustrated at this deal because I'm like, the seller, I'm willing to sell at this price. The buyer, knowing that this is not, what the MLS is probably going to comp this at, is willing to buy it at this price. But the banks don't agree with us, right? So they're not going to finance it. So what I ended up having to do was owner financing this deal, and creating a win-win situation for both of us, because the buyer does not want to go out and buy the neighboring townhouse because they're working a W-2 job. They don't have time to spend 3 months setting this up and hiring the right team and etc. and redesigning this property into looking like this on the screen. So they wanted to buy from me, right? So this is a wrapped that I did. But long story short, after this deal, I started looking more into commercial deals because I was like, you know what? With commercial hotel deals such as hotels, if I'm able to make 97K on on my hotel, then my valuation for my hotel will be a lot higher than my neighbor's hotel that's making only 50K on their financials, right? And so this is when I started looking at hotels, because if I can do better than a market, then my hotel is going to be valued higher than the market. And so you can see here, this is a booking in 2020 for about $500 a night. And then so here, another concept that I picked up during short-term rental investing years was BRRRR strategy. So for those of you guys who are a little bit newer to real estate, it's buy, renovate, rent, refinance, and repeat. What that really means in a nutshell is that you buy something that's a little bit more value add, and you renovate it and you make it beautiful, and then you refinance it. At that point, you pull out all your initial investment and rinse and repeat and just use the same capital over and over again. And so I bought this duplex for only $200K cash during the peak of the pandemic. And you can see the top pictures of what it looked like before. It wasn't in too rough a condition, of course, but it also didn't really have any wow factor to it. In the after, you can see that it looks, I had guests that tell me that they feel like they're staying at something that comes out of a design magazine. They really like the design of my properties, and that's why they selected my properties over staying with other folks. And so I was able to get a $600K valuation on this $200K purchase in a very relatively short amount of time. So I was able to pull all of my cash back out and then some. And so using all those nuggets of knowledge, I decided to focus on hotels and motels, because like I mentioned, commercial valuations are based on income. And for those of you guys who have a tech background, you might find this really interesting, is that with hotels, just like with short-term rentals, is that the better your search engine optimization, the better your online visibility is, the more your building is worth, which is crazy to you, but if people can't find you in 2022, they can't book and you don't make any money, and therefore your hotel will be worth a lot less than your neighbors who has a hotel that has an amazing social media and online presence. And so by being really good at your social media game and being really good with your search engine optimization and understanding Airbnb, Expedia, Booking.com algorithms, that really goes a long way in making your hotel actually worth more. And the second point is scalability. So I tell this to a lot of my fellow short-term rental investors, is that, try buying 30 short-term rentals in 1 year and you will probably cry, because I've personally done about 10 to 12 closings simultaneously, and I felt like crying that whole 2 months. So it's a lot harder to scale if you're trying to buy 1 unit at a time. But if you're buying a whole hotel that's 48 units like we did, then you're effectively buying 48 Airbnbs or short-term rentals in one time. And then efficiencies, there's a lot of efficiencies in getting materials in bulk, furniture in bulk. I'm able to negotiate sometimes as much as 50% off furniture pieces at this point, but at least 20, 30%. And I'm able to get, cleaning and maintenance a lot cheaper, because now instead of hiring out and giving short-term rental management companies 20 to 25% of my gross revenue, which can be a lot, I can just hire a full-time manager at $50K a year and give them the same roles and responsibilities that a lot of short-term rental management companies take. And at 40 units, the gross revenue, 20% of gross revenue is a lot more, let's just say, than paying someone 40, 50K a year for full-time on-site management. And then also, for those who are in the short-term rental industry, they are being very, very sad about short-term rental regulations right now in a lot of towns. Airbnb, becoming a household name, has experienced a lot of pushback from local factors, from other hoteliers in the area who are lobbying against short-term rentals, and also from local residences who feel like their housing costs have risen because of short-term rentals coming to their neighborhood and taking over a lot of the properties. And therefore, there's more and more short-term rental regulations. Now, I still buy short-term rentals because I know in the towns I'm buying in, I do a very, very thorough due diligence in terms of the regulations, what's coming down the pipeline, what are meeting minutes talking about short-term rental regulations. But I love short-term rental regulations if I'm going to buy a hotel in that area, because I know that I'm going to be one of the key players on Airbnb. If I buy a hotel, I put it on Airbnb, and nobody else in that area is really going to be able to effectively operate on Airbnb due to short-term rental regulations. So now we're really focused on boutique hotels. We're not really looking at franchises like Hilton's and Marriott's and other flags. We're not really looking at those. We're really focused on building unique experiences to our guests. So a fleet of tree houses, little tiny lakefront, tiny homes lakefront, or, 30 cabins somewhere nice, or, even just converting an old ugly motel into a luxury or at least unique guest experience. Those are things that we are really passionate about. So we're not looking to partner with franchise hotels as a result. We're also not looking at franchises because they take 10 to 17% off the top of our revenue due to franchise fees. And we are normally buying in markets that are about driving distance from major metropolitan areas. And we're usually looking at least double in hotel valuation after everything that we're doing to it. And our game plan is usually to cash out, refinance, or BRRRR the hotel in about 2 to 5 years, and reduce overhead as much as possible using technology and automation. And so this is me looking at a lot of hotel deals. I've underwritten many, many hotel deals and probably said no to a lot of hotel deals that most people would have said yes to. And the reason for that is because I'm very, very conservative in my underwriting. And so these are some of the hotels on the first 2 pictures, are hotels I've actually walked and ended up rejecting because I felt like it was too overpriced for what it was. On the right-hand side was the first hotel that we ever bought. It's 48 keys. It is very tacky but beautiful at the same time, I guess, with a heart-shaped tub. We purchased it for very, very little money. For $750K, we bought it in January, and by July, we're approached with the bank to see if we wanted to cash out, refinance this already. So, but let me backtrack first. So we bought this with owner financing. We bought it for $150K down payment, 6% owner carry, 3 years balloon, which basically just means that in 3 years, the entire note becomes due. And we put about $500K in terms of rehab and furnishing. And we were able to get a appraised value of $2 million just solely based on the real estate, because we don't have 1-year hotel financials yet. We're still able to get a $2 million appraised value, which is basically a bonus $750K, instant equity basically, in under 1 year. So it's a pretty good deal. And we're looking for more deals exactly like this across the USA. And you can see why we're able to get a $2 million appraisal from an initial $750 purchase price. So on the top right is what it looked like when we purchased it. It's very dated, it's very clean and mint condition. It's just very, very old. On the bottom right, you can see that this is the during, basically. So this does not have the decor set in yet. And this is with all the decor and everything staged already. This is what it looks like now. So from an average daily rate perspective, we're able to push this. It was, I think, booking at somewhere as low as 69 to a high of $100 before renovation. And now we have some nights that are booked months in advance at over $200 now a night. So we have pushed up our average daily rate significantly with the renovation. And you can see more pictures here. We have a desk area as well for those who are traveling and working from, digitally online. And we also have a little nice patio set for our guests because we noticed that they love to sit outside and look at cars and visit with their friends and etc. You can see here we did a little nice live edge and wood panel accent area, and we also did a really cool fireplace. And by the way, I answer every question at the end, guys, but if you have a question about a specific slide, I can go back to the slide at the end. And then also another case study is this third hotel that we bought, which I really like this deal because we were able to start making money from day one. So this one is, we bought 19 units for 1.2, and once again, owner finance. And what I like about this deal is that rather than the traditional ugly motel look, it was really a series of duplexes and single families that we bought. And you can see one of these duplexes and what they look like from the outside on the bottom here. And you can also see that it already looks pretty nice. I mean, it's nothing luxury really, but we were already able to push the ADR to north of $100 to $200. Well, actually, I think our ADR actually were closer to 150 to 200 during this peak season that we just had in the fall. And the Blue Ridge Mountains is beautiful during the fall. That's the peak season. It's considered a leaf season. It's when all the leaves become hues of red, gold, and it's just absolutely stunning. And so a lot of folks tend to visit the Blue Ridge Mountains, which is, by the way, part of the Smoky Mountains in the fall. And so, we're slowly upgrading the rooms, doing small changes like upgrading the TV, painting the rooms white, to installing wallpaper, changing out the beds and etc. right now. And our game plan actually is to make a really, really nice common area. And that's what we're working on right now, is to make amazing inside common area where guests can play board games, they can watch the TV, they can hang out with their friends, it's almost like a co-working space as well. There will be a lot of desks for people to sit on, a lot of and really, really good coffee as well, and snacks for people to take. And so that's what we're working on right now for this space. And this is something that's a sample deal. I'm not going to go too much into it, but we did a lot of underwriting based on both short-term rentals and hotel data. And then we always choose which one we pick based on what this deal feels like the most. Is this more like a short-term rental in feel, or is it more like a hotel in feel? So for our 48 key hotel, it really does feel like your standard hotel room, even after upgrading it. So we underwrote it closer to a hotel. So we used CoStar data for the hotel ADR and occupancy. Now for the North Carolina deal, we actually use short-term rental data a lot more because it just felt more like a short-term rental with all the little cabins and cottages that are clustered together. And so you can see that here, a lot of our comps are making as much as $52,000, this little cute cottage on the left-hand side. But we did not underwrite it at $52,000 a unit. We wrote, so the range for one bedroom cottages was between $21,000 and $52,000. We picked for 25, even though some of these are just absolutely horrendously staged. You can see that the last two in terms of our comps are just really ugly, like this one that just has a chair as the picture. So if that chair picture can make that much revenue, $21,000 a year on that one unit, we feel pretty confident that once we have redesigned the space and offer a really inviting and warm common area for our guests, we're able to make at least $25K. But we might actually get up to $52K a unit, which is a very, very significant delta. That's not something that you probably see in the multifamily space, this giant swing based on how great the design is and how great the marketing is. But this is something that we're able to do in the short-term rental and hotel space, is that we understand if guests are willing to pay for that experience, they're willing to pay an extra $50 a night for a 5-star experience from beginning to end. And they might even be willing to pay $200 extra a night for a luxury, right? So, and it doesn't even have to be luxury. It just has to be memorable. It has to be special, and it has to be comfortable. And so looking forward, I'm building a hotel and short-term rental fund. It's a 506c fund so that we can pick up distressed deals faster in this market, because we're anticipating that a lot of short-term rental operators are going to start offloading their short-term rentals, and a lot of hotel operators are going to start offloading their hotels, especially if they're mom and pop operators in this current market. And I also have a hotel mastermind, because we're constantly looking for vetted operators who are willing to partner with us across the USA. So we do want them to understand how to analyze deals and operate hotels correctly, though, which is why I have the mastermind. So we are training a new wave of hotel and short-term rental operators as well. So I have a short-term rental mastermind. I also have a hotel mastermind for training folks to use our systems and processes across the USA. But anyway, now it's time for questions. And by the way, if you want to stay updated and get more information on anything that I've talked about, the masterminds, if you want to book a one-on-one consultation or anything, it should be on direct.me/Diya Liu.
Awesome. This is great, Diya. It's amazing how much you've scaled up just from 2019 to now. That's all you've been in business, right? It's massive. It's incredible, really. Great presentation. Let's get through some of the questions here. The first question is on STRs. Diya, what are your thoughts on purchase versus arbitrage? Have you done any STR arbitrage at all?
Airbnb arbitrage is basically, for those who don't know what the term means, is basically signing a long-term lease with the landlord, let's say $1,000 a month, and then turning around and furnishing it and renting it on Airbnb for, for much more, and therefore turning a profit and making the spread between the short-term rental revenue and long-term rental revenue. And to me, that just further proves the point that short-term rentals are so lucrative that people are willing to turn long-term rentals by signing a lease into short-term rentals, right? That's further proving my point that they're 3-4x plus the long-term rental revenue. Now, for me, I love real estate. I love not just the cash flow. I love the appreciation as well. I love the tax benefits. There's some deals like that deal where I bought it for $95K. The next year I sold it for $250. Now, I did make money on the cash flow during that year. I made $32K gross, probably netted about, a little bit less than that, of course. I think I netted about 25K. But I made most of my money on the actual sale, right? Like I on the actual appreciation. So, and also all the bonus depreciation, all the tax benefits I get too. So for me, personally, I don't focus on rental arbitrage, and I'm not done for rental arbitrage, and I don't teach rental arbitrage because I feel like it is just another job. I don't want to get myself into another 9-to-9 job. A lot of my short-term rental operator friends, they have had very great success with rental arbitrage, but at the same time, I feel like they work a lot harder, to stay successful. Like, of course they have systems in place and they train VAs and things can go really well in theory. But once again, you're only making money if on the cash flow, you're not making money on the tax benefits or the appreciation.
Yeah, great point. And for those of you who don't know, there's some additional benefits if you are W-2 employee and actually do a short-term rental and operate it yourself. It's called the STR loophole. Just Google it and you'll probably find something on it. So you're able to cost segregate and bonus depreciate a short-term rental. And as long as you put in 100 hours of work and you're actively managing the rental, it will allow you to collect a significant tax offset for your W-2 income, which is very important. So there's definitely, like Diya pointed out, a lot of advantages to actually buying versus just renting and doing an arbitrage.
And I think that in this market, especially, even though the interest rates are not so great right now, you can buy a short-term rental with as little as 10% down. So in some markets, that could be just a $20K investment all in, including furnishings. And so, like some of my short-term rentals when I first started, I didn't spend a lot. I spent, $12K on down payment for one. I spent maybe under $30K on down payment on another one. So I didn't really have to spend a lot of money. So it's not like you have to put 25% down either.
Right. And in terms of loans and insurance, is it different for short-term rentals versus long-term rentals? Like in terms of the mortgage you find?
Yeah, so you can't technically use your secondary home loan to buy a long-term rental investment because you normally when you buy when you have a secondary home loan, you sign a secondary home rider, and that rider says that you have to maintain exclusive control over the property, which means you can't just rent it out and never get access to it for a year, which if effectively eviscerates your ability to use a secondary home loan to buy a long-term rental. So that's one reason why it's different. Otherwise, like as a rental property, if you're getting mortgages, most lenders are just going to underwrite or analyze a deal as a long-term rental. There are specialized short-term rental loan products out there. The interest rates are going to be higher. So I personally always analyze deals where it still makes sense as a long-term rental as a backup plan. So I just have always used the traditional loans out there, whether they're with local banks, whether it's with the STR lenders. I've always just used the same products that long-term rental investors use. Because I have always said, you know what, if it doesn't cash flow as a long-term rental, I don't want it because of short-term rental regulations on short-term rentals. With insurance is a totally different insurance as well, just because you have different risks and your typical landlord policy doesn't cover you.
Gotcha. Okay. And in terms of the current interest rate environment, would you recommend something like an ARM just to maybe buy a property at a lower interest rate and potentially refinance stuff further down the line?
If it's at least a 5-year ARM, then I don't really see the harm per se. I will say that, I have been just getting, so I guess that's no different than a lot of the bridge loans I have on my hotels, which is usually a 5-year bridge, not a 5-year, balloon period bridge note anyway. So I don't see a harm, but I definitely don't recommend someone getting into a 1 to 2 year interest rate product. A balloon, do not have a balloon payment in a year because you will probably be very sad 12 months from now.
Yeah. All right. Are your properties concentrated in a specific part of the country or spread all over?
I focus on across the USA. I tend to, it tends to be states that are close to Texas for me, but it doesn't have to be. We're analyzing a deal right now, that hotel deal that's on the East Coast. So that's definitely not close to me. But yeah, it's really just where the numbers work. I am very, very conservative and picky with numbers and locations. So I do have to, because of that, branch out to across the USA.
How do you decide the most lucrative STRs, where to pick up the most lucrative STRs? Any tips on how to evaluate?
So I teach that in my masterminds and boot camps. So if you want to, book a one-on-one consult, you can definitely use that link. But I can give you some quick tips right now. So I tend to use numbers. I don't ever, I know some folks who make the initial mistake of falling in love with a property and trying to make numbers work, or trying to buy within a 1 hour radius to them, and then therefore trying to make not so great numbers work. I don't recommend any of those methods. I just recommend using something like AirDNA or Data Rabu or awning. There's so many different tools out there. Because of Airbnb has become a household name, the short-term rental data industry has boomed as a result. But I also caution those who are brand new to real estate investing to just use these tools by yourself, because you're probably using them wrong. These calculators are just as good as the operators who are using them. So if you using the same tools as me, probably you will come and arrive at a different conclusion. But there's definitely a lot of tools out there. Data Rabu is free for the preliminary analysis. AirDNA is free for the first 3 searches, I believe. Ani, I believe, is free. STR Insights has a 7-day trial. There's a lot of data out there. It's just very confusing for someone who's brand new.
Would you be able to share some links with Diya so I can send it out with a recording of the ones you just mentioned?
Yeah, for sure.
That'll be great. Is there any specific things you look for, like occupancy or like the rent revenue from the AirDNA? Like, for example, if you go on AirDNA, it will show you the occupancy and revenue from the property. Is there any specific data you're looking for in terms of LTR versus STR, like some differential or something quick you can share with us?
There are quick things, but I don't really want to oversimplify. Of course, we're looking at the RevPAR, which is basically the average daily rate multiplied by the occupancy, how high or low that is. But I'm also looking at time differential. So like, for example, for hotels, we're looking at if that number is going up, if it's going down, where is that falling in the last 10-year range? Is it trending upwards or downwards? Is it recovering from the pandemic still? Et cetera, et cetera. I'm also looking at sources of tourism, like what are the demographics of the tourists? I'm looking at the sophistication of the market. Are there other major players who are already doing a really good job out there, or are people making it's just mom and pop operators with cell phone pictures on Airbnb that are making up the large majority of the Airbnb or hotel listings? If it's mostly just cell phone photos, it's mostly just under optimized properties, and I know I can definitely dominate this market. Versus if it's something where like Austin, where there's so many beautiful short-term rentals, so many beautiful hotels, it's going to be a lot harder to stand out. So there's definitely markets where it's easier for you to stand out versus others, and those are usually the ones I pick.
Gotcha. Right. How frequently do you replace the furniture and furnishings or furnishings for your STRs?
It depends on how cheap you are when you start set it up. I know folks who are very cheap when they start out. They try to, get the cheapest version of everything, or they hire a designer who is not in the hospitality space and who doesn't understand, what is durable versus what it's not, what is going to be guest friendly versus what is not. So it wildly varies, but usually the products that we use, we're able to use a couch for at least 2 to 3 years. That's one of the things that you probably have to replace the most. But there are couches out there that will last at least 5 years, and that's just operator experience really, and owning a very large Facebook group also get you insight into that. But yeah, normally you probably have to replace the high touch areas that are big pieces of furniture, such as your couch, every 2 years. Otherwise, a lot of stuff you don't really have to replace that much. Pillows, decor pillows, and linens get a lot used and abused very much. Just cost of doing business. Sometimes you could have brand new towels, and then a large group comes in and you have to replace an entire set of towels again. So, and it's kind of up to you whether you charge that to the guests or not. Is it just like a normal use scenario and they just got a little bit messy, or did they have a giant party and use the towels to clean up? So that's, it's just sometimes it's a cost of doing business. Other times you can charge it to the guests.
I don't know how much we want to go into the next question, but here's the one. How do you go about maintaining and cleaning your STRs? Can you take us through typical cleaning process after they moved out? I don't know if it's too detailed, you can skip it, but maybe just talk about any processes you have in place, maybe.
I don't personally clean my short-term rentals. Now, I do have a lot of tips on how to hire cleaners, but I've never wanted to. I hate cleaning, so I've never wanted to self-operate every piece of this puzzle from day one, because I knew if you wanted to scale to 100 doors and more and beyond, you cannot start day one cleaning toilets, right? So that being said, you just have to, I really think that you should hire that piece out, and just because it is a cost that you pass on to your guests, anyway, and a professional cleaning company is probably going to do a much better job than you are anyway. So,
Have you considered leasing STR signage rights? Example, Cedarwood Inn for money.
I don't really know if I understand that question.
I'm not sure. I think maybe they're talking about some kind of a franchise, or I'm not really sure either. Okay, we'll table that one.
Yeah, if you have clarification, are you talking about franchising? Because we're probably not going to franchise.
Yeah,
But
it's a boutique. I mean,
yeah.
there are some boutique hotels who have started doing that, right? Like I know
We're actually going to rebrand Cedarwood once we have finished renovating. So we're not even going to keep that name. So
Is there a specific name that you use across all your motels, hotels, or is there a brand, or is it just
no, I think they're going to be named different things, but our fund is going to be called Welcome Fund, but I don't think we're going to call all the hotels like Welcome Hotels or something like that.
Right. So this is an interesting one. How much capital did you have when you first started?
Very little actually. Yes, I did have a pretty high W-2 income as a patent litigation attorney, but I lived in New York City until I moved back to Austin to save more. And I was aggressively paying off my law school debt, which even though I had a full ride, I still had to pay for living in New York City, which is not the most inexpensive city on the planet. So when I started in real estate investing, I just had enough to put 5% down on my primary residence in Austin. But, I just saved and scrimped and invested 70+% of my W-2 income. And once you get your first 2 or 3 short-term rentals, you can use that rental income to accelerate your investments. You basically, you really do accelerate after the first 2, basically, because now you're cash flowing at least an extra 50, 60, 70K a year from your real estate investments almost right off the bat. And you can use that money to buy your next short-term rental or 2 or 3. And if you use strategies such as Burr strategy or something like that, you can recycle the same down payment over and over again to buy more properties, because you can pull that initial capital investment back out and redeploy that capital into another deal. Or if you want to passively invest, you can also, you'll get more, your money will double, right? And then you really just get to a point where you quickly accelerate after a certain point.
That's a great point. So one more question is, where can we learn more information about STR regulations?
County websites, there's not really a centralized resource per se. Data analyses or sites are going to tell you how to, how harsh the regulation is, which is why I tell a lot of folks, we do have a short-term rental mastermind, which we cover regulations. If you are looking at a market, we will analyze deals live in class. And we normally have at least 10 different people analyzing 10 different deals across the USA. And that's really just how you learn the regulations across all the different cities. You can just usually go on the city or county website, but I, off the top of my head, know at least a couple dozen cities and what their approximate, regulations are. So having someone who has insight across nationwide is really invaluable in that instance, whether as a consultant or as a mentor. But the STR regulations are constantly changing. So there's not really like a central repository where you can just look it up. Arizona, an entire state, there's like certain nuances that are changing soon. So it's really just keeping up, or networking or finding a mentor who can guide you in the right direction.
And Diya can, so you know where to find her. Diya, do you anticipate a possible recession in the future? We know that people are traveling now, but what about in the future? As a multifamily investor, I try to pay attention to occupancy. How do we analyze that?
Yeah, so when I've been analyzing deals as if there's going to be a recession since 2021. So because I just saw the interest rates and I saw that it just felt like, there were a lot of people basically that were hinting that something was going to come down the pipeline as soon as the interest rates rise for a very long time now. So it's not news to most folks who've been paying attention in the real estate space that there is a looming possibility of either a correction or a recession. I have been underwriting our hotels at a much higher cap rate since 2021 because I assume that at some point that the cap rates are going to go up. And for those of you guys who are already, sounds like you are the person who asked the question, already a seasoned multifamily investor, you understand that higher cap rate means a much more conservative pro forma or analyses of the deal. And so, for example, if the market is at a 9 cap for hotels in that market, we're underwriting at a 9.5 or 10 at least. And that's just how I've been doing that since 2021. I've also analyzed it to where what happens if the interest rates rise another 1 or 2%, and what happens if I'm only able to get 65% loan to value refinance at exit or versus 80% or 75%. So I analyze a lot of those scenarios to see that, hey, this deal still pressure tests, like basically at what point is this deal not going to be a good deal anymore? And if I can raise my interest rates by 2%, I can still raise my cap rate based on current market rate at 1%. And I can reduce my cash out refinancing scenario to where I'm at 70% LTV. It still looks great. I'm like, well, then that is probably fine. I've done everything. No one knows the future. It could be even worse than what I'm anticipating. But historically, according to CBRE, the cap rate doesn't fluctuate more than 1 or 2%, over the 2 years. So I've done what I can do in my best, in my power to have very conservative underwriting.
Makes sense. This is an interesting one. Is there a difference between how depreciation is calculated between hotel STR versus long-term rental LTR?
This is probably a question for your CPA or rather a cost segregation study expert, but furnishing, as far as I know, from year one is going to be completely written off year one. It's just so that's going to be the biggest difference. But my understanding is that after that, it's going to be a lot, very similar to other buildings. But once again, I'm not a tax person, so you're probably gonna have to defer this to your tax specialist.
I'll chime a little bit in because I've done LTRs and I've also done multifamily and explored this world a little bit. Again, consult your CPA for details, but a long-term rental, most people end up depreciating it straight line, which is 27 and a half years, right? You take the value of the structure. However, you're allowed to still do cost segregation and bonus depreciation, whether it's a long-term or a short-term rental. It really doesn't matter. You're still depreciating the structure by shortening the depreciation of individual items. The difference between long-term and short-term rental depreciation is really simply that, let's say, given the same house, you're going to have more furnishings in a short-term rental that you'll depreciate also, as Diya pointed out, whereas long-term rental, you usually have a vacant long-term rental. So you're really going to have more depreciation on a short-term versus a long-term rental. Hotels are depreciated similarly to apartments or any other commercial investments. We usually would do a cost seg and bonus depreciation. It'll be even better than a multifamily because now you're talking about furnishings in addition and common area furnishings. So you're going to have more items to depreciate. So That's a brief answer for you, but you're welcome to ask your CPA for more details.
Yeah, for sure.
All right. Are you able to manage your short-term rentals and hotels easily, or have you encountered any kind of challenges? What kind of challenges?
There's always challenges. There's great days where guests, send you pictures of their kids staying at your property and saying what amazing time their family had in your vacation rental or your hotel. Or someone got proposed to on your property. All sorts of really heartfelt stories. And then there are days where you're just like, why did this guest stomp French fries into the carpet? I mean, like, it's just like there's like 20 French fries mushed into the carpet. So I mean, it's just of course there's negative days. We have been really lucky with our hotel management that we have found really good management on site for our hotels. For short-term rentals, the most challenge I've had was hiring cleaners rather than management, because cleaners make or break your guest experience. If your guest checks in and there's hairs on that, they can, even one hair on the floor or a speck of dust on top of the fridge, there are guests who are going to leave you a 1-star review. They're just like that. So you really have to vet your cleaners very carefully. So in small towns, that's going to be a lot more challenging when the work ethic is just not there. And so you might have to hire or fire like 3 different cleaning crews before you can find the right one for your short-term rental, or so really it's just a trial by fire on that front. But I know folks who test their cleaners. They will crumple up pieces of paper and put them under the floor, under the bed, and if the cleaner doesn't catch it, then they are not hired. Or you really just have to get creative in this industry.
Yeah, sounds great. Sounds like fun. I see. I watch her. I'm in her Facebook group, and I watch a lot of comments, and I'm just reading right now, just trying to absorb what kind of challenges. And it's always interesting how people come up with different questions. And I'm like, oh my God, people do these things. It's crazy stories. This is an interesting one. And I know we're running way beyond this allocated time, so we'll try to wrap up. There are some questions about your fund, but what's the business structure you set up for your short-term rentals? Is there any specific business structure you set up, like LLC per short-term rental, or?
Yeah, LLCs usually for short-term rentals and our hotels as well.
Gotcha. All right. With your fund, I think there were a couple of questions about your fund. Have you had any successful exits? If so, what was the return to investors?
Like I mentioned, we just successfully got the cash out refinancing on our Arkansas hotel. And we were able to buy it at $750, put another $500K in it, and we got it appraised for $2 million. Right now we are we're still working with our CPAs to figure out what that return to our investors are. But that was under 1-year window as well. So we're also trying to figure out if it's best in everyone's interest to reinvest that into the hotel, because we've only renovated about 1/3 of the hotel rooms. So we can actually use that money to reinvest into the hotel a little bit more, and then get a much higher appraisal once we have 1 or 2 years financials. And then at that point, everyone's returns even more. But long story short, we were able to get a bonus $750K of a forced appreciation under 1 year on a $750K purchase. So it's basically doubling the original value, and more. So, and we have a lot of short-term rentals. And so if you want to see a lot of examples of successful short-term rental exits, I mentioned some earlier on the slides, but I bought a lot of properties and resold them at more than double what the original price was. And the cash on cash returns on those were north of 50%. So usually sometimes over 100%. So
Awesome. Yeah, short-term rental business is really a cash cow, compared to long-term rentals. It's long-term rentals is a lot of work and no cash, and you only banking on the appreciation on the back end. So I think there are more fun questions. I'll defer this to later, and you guys can get in touch with Diya on the fund. And I think she's still hashing out the details of the fund, so I'm not sure we want to get into it. The last question is, would you say that the hotel buying process in the States is similar to that in Canada? And with your course, would I be able to apply those principles to the Canadian market?
Yes and no. So, real estate laws and syndication and et cetera, like fundraising laws, are probably going to be different from country to country. So if you're trying to raise money for your deal and it's a Canadian deal, and you're trying to work with Canadian investors, that's going to be a totally different set of laws and how to fundraise legally. So that if that's why you're wanting to join the mastermind, that might not be a good fit. I do have Canadian folks in my mastermind, but they are trying to invest in the US because they have relatives in the US. And so if that's something that you're interested in, I think that might be a good fit. If you're trying to buy a hotel in Canada, I think it's probably better for you to just book a one-on-one hotel consulting hour with me to talk about that deal and some of the challenges that you may face and some of the things that you might not have thought of to ask your broker or the listing broker. That might be better for you if you're looking at a Canadian deal, just because a lot of our time in the mastermind is spent analyzing US based deals. And a lot of our time spent in the mastermind is also interviewing guest speakers who are already hoteliers here in the US. Once again, we are probably going to have a guest speaker who is a hotelier in the Caribbean soon. But for the most part, our content is US focused. But I just talked to someone who was interested in buying a hotel in Costa Rica. So I do consult on international deals, but the data set is going to be much, much different. You don't really have the benefit of the same data analyses tools sometimes. And the laws, of course, are going to be different.
Makes sense. Thank you so much, Diya. I know we went way past our scheduled time. I appreciate you staying here and answering all the questions that were asked today. Again, I hope everyone, this was really useful. I know I learned a lot. I hope you did too. Thank you again, Diya. And you're welcome back anytime if you want to talk about the hotel fund or any other future opportunities for our investors. Thank you again and have a great night, everyone. Thank you, Diya.
Thank you. Thank you.
Bye now. Hi, I'm Kavita Bartake. I hope you found this video useful, and if you did, please don't forget to subscribe to my channel so you can get notified of any future videos I upload. I plan to cover a lot of investor education on this channel, and I hope you'll stay with me for it. If you have any feedback on future content you'd like to see me cover, please drop me a note or a comment on my video. Thank you for watching, and thank you for supporting me.